Hello, I'm Elisa Zhang, and I'm a physician as well as a life and money coach. Today's topic is inflation and why inflation is one of the ways that really destroys your wealth building capabilities. Right now, inflation is recorded at 8.2 or 8.3%. And some say it's actually likely higher than the actual reported inflation rate. And why is inflation so bad? Well, inflation erodes our wealth, right? It makes money worth less. If you think about a return on investment, if your bank was giving you 8.2% interest on your money, you'd probably be pretty excited about that, right? Like that's a pretty good rate of return for something that's in a safe investment. And often real estate, we look at getting a 10% cash on cash return, which is not that much higher than 8%. And if inflation really is higher than 8%, it may be close to 10%. When we look at syndication returns, a lot of times the pref interest rate is 8% return on your money. So that means that right now with the inflation rate of 8%, a return of 8% means that your money is just holding its current value. It's not actually growing. It's not actually becoming more value. And so in order for your money to actually earn more value and actually grow, you've got to have returns that are higher than the rate of inflation. And when inflation is as high as 8%, that can be much harder to do. Typically, the Fed targets inflation rate between 2 and 3%. So this is why we consider the real return on the market 7% or something along that, because if inflation is at 3% and the actual return on the market averaged over time is 10%, you take that 3% away from 10%. Well, now if inflation is 8%, if the average stock market return is 10%, now we're only looking at a 2% over long time return, which is just, again, a way to really decrease wealth as well as just make it really hard to build more wealth. The other thing about inflation is that when you're taxed on capital gains, inflation isn't taken into account at all. So if you buy something, like let's say you buy a house at, let's just make the numbers easy, $100,000, and the house appreciation keeps up with the rate of inflation. And so then you sell it, I didn't do the math, but let's say you just sell it 10 years later, and now it's appreciated to $200,000. Well, that $100,000 is just potentially just kept up with the rate of inflation. But now, if this is an investment property, you're going to be taxed on that $100,000, right? And the government doesn't care that the worth of the house is actually still the worth it was when you first bought it, that it actually didn't increase in true value with inflation. They just see that increase from the price that you bought it from, and that you're going to pay tax, capital gains tax on whatever that difference is, not that inflation adjusted difference. So this is why inflation also is just, so terrible, is that like even your capital gains, like if you buy, stocks now and you sell them later, when if they're not in a tax advantaged account, like a retirement account, you're going to pay capital gains on the sale of that stock, even though it may not have, potentially even kept up with inflation, right? So in a way, it's kind of at a loss because it's valued less at what you kind of bought it for in terms of buying power, but you're still paying taxes on it. So this is why inflation in some ways is actually worse than like the stock market going down, because the stock market always will go down at some point. There's always going to be times where you've got a bear market. It's just the correction. Things go up, things go down, but overall the stock market does go up because companies earn more and grow more, and our economy over time is growing. And that's the same thing with recessions, right? A recession happens after a long period of expansion. And we've recently had a really long period of expansion. I mean, technically we had a short 2-month recession in 2020 as a result of the COVID pandemic and the uncertainty that came from that. But that got called a recession after it was already over. So, yes, we had a lot of uncertainty, and, there was a lot happening at that point. But, in actuality, we've gone, since the 2008 recession, which is a period over 10 years of just sustained growth. So this is why inflation is just an important measure to keep track of. as prices are going up, or you pay the same price for something that's smaller or shrinkflation, realize that our money is losing value. And that is something really to be concerned about. And, is something that is being addressed by our government now. So that's it for today. I hope this was educational for you. I will keep bringing these education videos to you. If you could press subscribe so you'll get each video each week. I publish a video every Monday. Thanks for watching. If you want to learn more about me, you can go to my website, growyourwealthymindset.com. If you'd like to consider working with me, I help high-income professionals grow their wealth, turning their high income into actually true wealth, because it's not what you make, it's what you keep, and it's making your money grow. And in this inflationary environment, it's even more important to make that money grow. Thanks for watching.